All right, I wanted to do an update and analysis of the current price action, especially what's been going on in this section right here. I have not really been trading very much. I've been busy with other things, and the trading I have done has been very much really big losses. Absolutely not good at all. And one of the things I've learned from this experience is that if trading is something that I want to become good at and something I want to get, something I want to make an actual source of income, it's not something that I'm going to be able to be passive with. It's something that I'm going to have to focus on every single day. No ifs, ands, or buts. Excuse me, because these trades that I did, they were very passive. It's like I was working on other things at the same time, and I was kind of just like looking at the charts for a little bit, making just making random moves right here and there. And then I absolutely got wrecked. So yeah, that's a note to myself. Other than that, I have been studying Wyckoff, accumulation and distribution, and just Richard Wyckoff's methodology when it comes to charting. And I've been finding it very useful to identify setups, and I do think it's going to be a big part of my trading method, and being able to identify setups and how to trade certain setups. But that being said, I still need to cultivate the discipline in order to execute properly. But without further ado, I want to get into the main thing that I want to explain in this video. Okay, so let's go to 30-minute time frame. So here's an overview of the current price action. You can see we had cascade down here, redistribution phase, another leg down, redistribution phase, leg down, okay? And then we had a pop up here. Now, I want to focus on specifically this structure right here, because there's a couple things that I see here that I think is important to make note of. One is we have a textbook, what I like to call a whipsaw, which is that you have a trading range right here, and price action will whip to one side to shake out longs, okay, and then it will whip to the other side to shake out the shorts. And notice how it breaks the trading range on both sides. Okay, now what's interesting about this whipsaw too is that we actually come back down into the structure. And what I mean by that is if I extend out these trading ranges, we actually came back into our structure, which I find is a little concerning. Okay, typically if you wanted to have this be like a bullish whipsaw, for example, you would want it to come back into the structure but just stay there for a very short amount of time and just come back out, you know, and at least hold above the structure. But that's not what we saw. That's not what we're seeing here. What we're seeing here is basically another accumulation distribution going on here. It's yet to know what we're actually experiencing here. But another thing that is interesting about the structure too is you can also see this in terms of Wyckoff terminology. You could see this as like your buying climax right there. This is your automatic rally, and this down here is your spring. So if we mark that up, you got your selling climax rather right there. You have your automatic rally right there. This is right here. You have your structure test. So that'd be ST, and then down here you have your spring. This could also be considered a terminal shakeout, because usually with springs, I find that they dip down a little bit, but then they pop up. Okay, but here we get a very deep retracement here. And when you're watching something like this real time, and you don't know to look for this, this is very scary. Okay, this looks very bearish, but actually what it is it's a trick. The composite operator is tricking people to short down here at the bottom. Okay, the first thing the composite operator is doing is they're taking out all the stop losses underneath here. Okay, so they're taking out all the people that longed within this entire accumulation range right here. So you're taking that out, right? And then you're baiting people to short at the bottom here. And just when people start to get bearish down here, you shake them out, okay? And you get this this whipsaw structure. So I thought that in and of itself was really cool, really interesting. But another thing I want to focus on is the structure that plays out in here too, because this was really interesting to me, and also the structure that happens in here, because this is really the first time I've been able to analyze this bullish structure on a 1 minute time frame. So if you go down to a minute time frame, excuse me, come back here, you can see the Wyckoff accumulation that took place here. You got your structure, you got your selling climax right here, automatic rally, you got a nice little structure test right there, and then you have a spring right in here. You know, you have a little bit of a creek here, and then you have your sign of strength up here, back to the creek, BUEC, that's like back to the edge of the creek. And see, notice how when we get this this Buick, that's just what I'm going to call it right here, we only enter into the structure for a very short amount of time before popping out, right, and having that bullish continuation, right? And then even in this accumulation phase right here, we do get structure tests, right? We come back to the edge of the creek, but it's very short-lived, okay? So I think if I was trading this properly, these are the areas that you would want to get in long, okay? Those are that is where you would want to place your bets right here. And one of the mistakes I made is I kept shorting, or I kept trying to short the top here. Like I tried to keep shorting these peaks, expecting us to come down to like this level right here. But I'm just inexperienced trader, and I've never really seen bullish price action like this before. So I didn't know what to do. When in reality I should have been going long here. Yeah, but anyways, we'll take a look at the volume profile too. So double click here. So this is how the volume profile looked on the minute time frame. Let's go to the 15 minute too. Okay, so on the 15 minute here, let's just look at the 15 minute really quick so you can see what's going on here. You can see it's just been very bearish in general. Okay, underwater you got a clean rejection right here, which is indicative of a further move down. When you get these rejections off the neutral zone here, it's just indicative of a move down. And when volume is unable to hold up above the neutral zone, that is how you know that you can expect further downside or just bearish price action in general. And that's exactly what we got. Upon this rejection right here, preceded the spring right here and that terminal shakeout. And then even right here, I think one of the reasons why I unfortunately, or I incorrectly started shorting in this range here is because we got a rejection right here. And I was looking for that. I saw that rejection. I was like, okay, we're definitely going to get a further move down. But, you know, if I looked at the other time frames, you can see during the same phase, and here you can see we're actually green on the hourly time frame, and on the 1 hour time frame, yes, we are red, but it is rising drastically. So just something to keep in mind. Also during this time frame, one of the ways that you could determine that this is actually a spring here. So let's just focus. Let's go to 30 minute here. I'm just going to define a range right here. Okay. One of the ways that you could determine that this is actually a spring or terminal shakeout and know that this isn't actually further bearish movement is because look at the trading volume right here. Okay, during this shakeout right here, in this leg down, you can see clearly we have a sharp impulse down. Now with this shakeout right here, look at the volume, you have a higher low right here. Okay, and you see this not just on the smaller time frames, but also on the larger time frames. So if we go on the minute time frame, you can see that first shakeout was right here. Oops. You could see that first shakeout was right here, and then the second one was right here. So slightly higher. That's more of an exaggerated divergence, but it's good to pay attention to that. And also on the 4 hour, you can see clear higher lows right there and right there. So that's one thing to keep in mind. Let's go back to the minute time frame. Come back over here. So another thing is on the minute time frame. What is cool to me is after we show the sign of strength, okay, we have a huge push in volume right here, right? We actually, it dies down a little bit right here, and we kind of flip in the red here. See, and when we started to get into this red here and started like getting rejected here, that's when I got scared and started shorting, which is like, I shouldn't have done that. I should have just let it play out, right? But the sign when you know that there is bullish confirmation is if you take the peak of the last high in volume. Once price starts trading above, once the VDO starts trading above that line, that is how I determine like that a breakout is confirmed. Okay, so we got a huge push in volume right here, which would have been nice time to long right there on pullbacks. Basically, that's like your dip buying. And just notice the structure of how this trades. It's just lower highs, or higher lows rather, all the way up. Okay, nice little, like, you have re-accumulation phases, huge spikes up to wipe out all the shorts. You know, I think it's very dangerous to short during the market, when the market is like this, because you never know when you're just going to get these like scam wicks up, like especially something like this, like, oh my goodness, that's just going to fuck you. But one thing that's kind of cool is when you do have these scam little pumps, you can actually take a line and then use that as like a local high and see how price reacts to it. So right here, we barely got up to that, but we shot up through it there. But if we take the high of this right here and bring it forward, okay, it's just cool to see how kind of price reacts to it. Kind of bounced off right there before making another wick up. I don't know, maybe I'm just saying things, but yeah. And then when the CPI data came out, we just got this huge fucking drop, and then everything just dumped after that, which is unfortunate. And now we are currently in what looks to be an accumulation phase. Like, looks accumulation or distribution. We'll have to see how it plays out. What I see here is, okay, that's our selling climax, automatic reaction. You have a spring right here. Like a little bit of a test of the spring right here, but you have a failed breakout here. So in that case, if we extend this out, so this would be UTAD, up thrust. Looks like here, see, that could be a sign of weakness, but this also could be considered a spring. It just depends on how you want to look at it. Like if you want to treat this as one structure or two structures. So if we're treating it as two structures, we could say we can have that as a structure, and we can also have this as another structure too here. So selling climax, automatic reaction, spring, test. We'll have to see what happens out of here. Personally, when I look at something like this, I like to keep it simple. Just keep it within this structure here. In terms of volume, let's look at volume. It would make sense, at least at the moment, to have this as a sign of weakness. But if we also look on the volume profile, you can see volume is increasing. So that does increase the chances of this actually being a spring. Okay. And if it is indeed a spring, right, then you would want to buy in on one of the retests, of course, and then probably trade it to the top of the range. Okay. I'm still trying to develop my personal trading like setups. I haven't yet gone and figured out what those setups should look like given certain setups. But if we do get a breakout of this, then it would be good to look for a Buick, so back to the edge creek, right? And in a deep one, you'll get one that comes back into the trending range, pops right back out, or you could get a shallow Buick, which would basically come back to that high. So if you get like a really big breakout here, it would make sense to at least come back there before coming out. But we'll have to see how that happens. If we check all time frames, yeah, it looks like volume is pretty stagnant. Who knows? Who knows? So I could, like, on a 1 minute time frame, just looking at this looks like it could be a potential spring. But given all the volumes, like, I guess we have a little bit of a bullish divergence playing out right here. Let's see how this plays out. Where was this one right here? So we do have a higher low in right here. So if we take out this level though, like if we go below that, then that would be not good. I would say that would indicate more further downside, and we'll probably take out this low right here. But anyways, that's my current thoughts on the market. My quick little update. Hopefully this is useful. Just wanted to analyze the price action. Anything else that I am missing here? Yeah, when analyzing this bullish price action, it's interesting how when stuff flips bullish, these red areas, even these rejections, like right here, I started shorting because you got a rejection off this neutral zone here, and I just got absolutely destroyed from that. So when price action is bullish, these red zones are actually indicative of buying. Like those are good times to buy and to look for longs, as opposed to short. And I think the strategy is to just look on the other time frames, okay? Because if it's red on the 1 minute time frame, but it's green on all the other time frames, like see, you can see on the 15 minute, it's green, although it's trending down, okay? Green on the 1 hour, green on the 4 hour. That shows you that, okay, the red zones are actually for buying, not for shorting, okay? Whereas if everything is red, right, and then you do get a rejection off the neutral zone on the 1 minute time frame, so let's just say it's green, drops down, rejection off the neutral zone, that is a sign to short, okay? And then how else can you view that? If it's red, if it yeah, so yeah, if it's red, then it's red all across the time frames, and then you get a moment of green on the minute time frame, or a moment of green on the shorter time frames, or on the other time frames. That is your sign to actually sell, right? It's not until you get a consorted breakout on all time frames, okay, when it is good, when you're safe to like assume bullish price action, at least temporarily, okay? And also, ideally, you'd want to see some sort of retest of the neutral zone as well, like we did right here. See, so you had here, let's go see this, just go into here, click on this right here. You had bust down here, pop back up, retest, pull up, okay? So you got rejected off this neutral zone right here, which is a little concerning. Okay, I think that's it. Yep, I'm done with this video. Peace.